Welcome back to the channel where we break down the most intriguing stock market stories in a fun and engaging way. Today, we're diving deep into the Kraft Heinz Company, ticker symbol KHC. So grab your popcorn, because this is going to be a wild ride through the land of ketchup and mac and cheese. First up, let's talk about some key metrics that help us understand where KHC stands. The price-to-earnings ratio for the trailing 12 months is at 12.04. which is pretty much in line with its 5-year average of 12.08. Looking forward, the P/E ratio is projected to be 11.29. This shows us that the stock is slightly cheaper on future earnings expectations. Now, the price-to-earnings-to-growth ratio, which factors in growth, sits at 2.96. A P/G ratio around 1 is considered good, so 2.96 is a bit high, indicating that the stock might be overvalued relative to its growth expectations. Ever wondered how much skin insiders have in the game? Insiders own a tiny 0.4% of the company. This low insider ownership can sometimes be a red flag, but it's not the whole story. How well is KHC using shareholders' money? The return on equity is 5.72%, return on assets is 3.11%, and return on invested capital is 7.06%. These numbers show that the company is making modest returns on its investments. Earnings per share or EPS is a solid 2.98. But what about the future? Analysts expect EPS to grow at 4.07% over the next 5 years. Now, let's take a trip down memory lane and see how EPS has evolved over the last 9 years. It's been pretty flat, with a compound annual growth rate of just 3.93%. Not exactly setting the world on fire. What about free cash flow? Over the last 9 years, it's been a roller coaster, leading to a negative CAGR of minus 0.33%. That's right, free cash flow per share has actually shrunk slightly over time. Dividend lovers, listen up! KHC currently offers a juicy dividend yield of 4.45%. But before you get too excited, note that dividends have shrunk at a CAGR of minus 2.45% over the last decade. They grew steadily until 2018, then faced a big cut and haven't grown since. When it comes to profitability, KHC boasts an operating margin of 20.39% and a profit margin of 10.62%. Solid numbers that show the company is keeping a good chunk of revenue as profit. But here's where it gets tricky. Revenue and earnings have been flat and inconsistent over the past 8 years. This lack of growth has reflected in KHC's market performance, trailing behind the VO index during the last 5 years. Debt-wise, KC has a debt/EBITDA ratio of 3.65 and a debt/FCF ratio of 6.22. These numbers suggest a significant debt load, which could be a concern. How has the stock performed recently? The average price return over the last 52 weeks is minus 6.89%. But analysts predict a brighter future, with a target price of $40.46, representing a 12.52% upside from the current price of $36.05. Personally, I think the fair value is around $42.08, which suggests KHC might be undervalued right now. So there you have it, folks. KHC is a mixed bag with some solid dividends but inconsistent growth and a hefty debt load. Are you team buy, hold, or sell? Drop your thoughts in the comments below. And don't forget to like, subscribe, and hit that notification bell so you never miss a beat in the world of stocks. Until next time, happy investing!